Hello viewers, welcome to my channel. Today we are going to see the current year June 2024 question. Question number 2 be on depreciation. It's slightly a different method. I'll explain it later. On 1st April, a lumpy company which depreciate machinery at the rate of 10% per annum on diminishing balance method. So they are using the WDV method and the rate of depreciation is 10% per annum. And on that date, on 1st April 22, the balance was 9,72,000. And then on 1st October, a part of the machinery from that one part is which was purchased in April 20 for 80,000, sold on 1st October 22 for 45,000. Also, on the same date, on 1st October 2022, they had bought one more machine, sorry, for 1,50,000 and the installation charges are 8,000. Okay, now this is the slightly tricky part. The depreciation, the company changed the method of depreciation. They say that they have changed the method of depreciation with effect from 1 April 2020. This is the problem. Depreciation as per new accounting standards cannot be charged retrospectively, that is from the back date. It can be charged prospectively only. But in old CA syllabus, they used to give sums like this. So they may give you some grace marks, but still you can understand. So with effect from 1 April 2020 and adjusted the difference in 2023. So we have to back work the value of the machine because they have given the debit balance as on 1/4/2022 is 9,72,000. See here, this is 9,72,000. For easiness and for time consuming should be lesser. So I have worked out everything. So I'll just explain that. So this was, we will go and find out the balance. So book value on first, so book value on 1st April 22 was 9,72,000. This is after depreciating the machinery using WDV method. So they have depreciated 10% per annum. It means that this value is 90 percentage. Okay, from 1/4/20 they are depreciating. Now we have to go back and find out the book value as on 2020 so that we can change the method retrospectively. Okay, so this is on 22. So this value is 90%. Then what would be the 100%? So if 90 is 9,72,000, what is 100 on 1/4/21? So that would come as 10,80,000. This is again the WDV balance on 1/4/21. I need the balance on 2020. So this is again 90%. So what is the 100% on 1/4/2020? So I got the value as 12 lakh. That was the book value as on 1/4/2020. Then on this we have to go for straight line method. So we are going to just apply for every year 10% on this. So that would come as 1,20,000. Hope this is clear to all of you. Now see here, on 1/4, now I have bifurcated it because calculation of depreciation to be charged in 2023 according to SLM. It was done up to 1/4/2022 in WDV method. So what I did, so in between they have said that they have sold a part of the machinery. So for convenience sake, I have bifurcated the machine as part M1 as part, part of that machinery as M1. So they have given in the question itself, the machinery was costing 80,000 on 1420. So total value of the machinery is 12 lakh. We have already worked out here 12 lakh. So out of that, one part is 80,000. So the other part is 11 lakh 20,000. I have named it as machine number 2. They have purchased one more machine. So I put one column of machine number 3. Now here I have written depreciation to be charged, because now they have changed the method to SLM. Now, what was charged already? WDV. So, what is the difference to be charged in the current year? This is what you have to work out. Okay. So, now 80,000, 10% is 8,000, and for 11 lakh 20,000, it is 1 lakh 12,000. So, the total amount to be charged as per SLM is 1 lakh 20,000. All of you know in the first year, there would be no change, either it is SLM or it is WDV. So there is no change and nothing to be charged in the current year. Okay, hope it's clear. Next one. Now this 8,000 has gone. The book value will become 72,000. Here 11 lakh 20,000. The depreciation 1 lakh 12,000 has gone. So now the book value is 10 lakh 8,000. We are not going to charge as per this book value. Earlier it was charged as per this book value. Now we are going to charge SLM, means constant amount. Okay. So 8,000 on original cost and 1 lakh 12,000. So this year also we have to charge 1 lakh 20,000, whereas it was charged on the book value as per WDB method. That was 7,200, and for this 10 lakh 8,000 it was 1 lakh 800. The total was 1 lakh 8,000. So it has to be charged now 1 lakh 20,000. It was charged as per WDB 1 lakh 8,000. So we have to charge further 12,000. The P&L account has to be debited further with 12,000 rupees in this current year. Okay. Now moving on to the next year. Now coming on 1/4/2022. Now this 72,000 machine, 8,000 depreciation has gone. So the book value is 64,000. Okay. And this machine, 10 lakh 8,000, again 1 lakh 12,000 depreciation has gone. So the book value is now, as on 1/4/22, 8 lakh 96,000. Now what happened in this current year before March, on 1st October? 1st October means 30th September, that is 6 months. They have sold this machine. So we have to depreciate this machine only for 6 months. So what is the depreciation? For full year it is 8,000. Half of the year it is 4,000. So we have to reduce the book value also. After depreciation, the book value comes to 60,000. This is the book value as on 1/10/2022. This machine is now sold out for 45,000. Now what is the loss? The loss is 15,000, because the book value is more than what the realization. Okay. So this is a concept of loss on sale. Okay. Now coming back to, on the same date, we have purchased one more machine. So I have numbered it as M3. We purchased it, that LMP company has purchased 1,50,000, and they have spent 8,000 as installation charges. So we have to add it, because we have to capitalize those things. So 1,58,000 will be the cost of that machine. This machine also remained 6 months during this year. So we have to depreciate it for 6 months. So that is 7,900. This remaining machines were there throughout the year. We have to depreciate it SLM. So 1,12,000 we have to put. So these 1,12,000 plus 7,900 will also go to your depreciation. Okay, will get debited. and machinery account will get credited. This 4,000 is for this machine for which it has been sold out. Now let us, so this working is over. So the balancing figure, here you can calculate, I have made the calculation. The balancing figure 8,96,000 minus 1,12,000, depreciation is 7,84,000, and this is 1,58,000 minus depreciation 7,900, that comes to 1,50,100. So the total machinery book value available as on 31st March 23 is 934,100. In case any doubt, please leave it in the comment box. You can give your comments also about the videos, and what else you want to be still cleared on this part. You can feel free to ask me so that I'll be able to explain it to you one more time. Hope it is clear. This is the book value. After reducing this depreciation, the book value comes as on 31st March 23 is this for this M2 machine, and for the M3 machine I have subtracted the depreciation 7,900 and arrived at 1,50,100, totaling 934,100. Now we will be able to prepare the machinery account. This is the part only you have to do it. One thing, you have to work back to arrive at the machine value as on 1420, because they have given the balance as on 1422. And the second thing is that the depreciation to be changed with retrospective effect. Of course, I see I may give grace marks or what they are deciding. We will see later. Okay. So now this is balance brought down. They have given 9,72,000, and October 1, 2022, another new machine has come for 1,58,000 along with installation charges. Now apart from this total amount, one machine costing 80,000 was sold out, and the book value on that 1 October 2022, as we have seen in our working, it was 60,000, and the depreciation was 4,000 for that 6 months, and it was sold for 45,000 by bank account, and this is by P&L account, loss on sale of machinery 15,000. So this machine is over. 64,000 was taken out, and we have calculated the difference in the second year. First year there is no change. Second year, because the depreciation was worked out on book value, that is written down value, we have to bring it back to SLM. So there is an increase of 12,000 that we have to charge to this machinery. Then current year we have to charge for the remaining machinery for full year, and the new machinery for 6 months. And this is the balancing figure available with us. When you total this, you will be getting the matching this, both the amount will get tally. This is all about this question. You can just leave your comments for any clarity if you need it, and don't forget to subscribe. Subscription is totally free, and if you like my videos, please give a thumbs up. Don't forget to that, and share it with your friends and those who are interested in this type of learnings. Thank you for watching. We'll see you in the next video.